Welcome to Tilray Times. This channel is dedicated to cutting through the noise surrounding Tilray Brands and the broader cannabis and consumer packaged goods sector. We don't focus on hype, short-term price swings, or emotional market reactions. Instead, we analyze what actually drives long-term value: regulatory shifts, institutional positioning, balance sheet strength, global expansion, and strategic execution. Every video here is designed for investors who want context, not clickbait, and understanding, not speculation. Whether the market is moving up or pulling back, Tilray Times exists to explain the story behind the price and the forces shaping Tilray's future. Yes, compared to the other names in the cannabis space, Tilray is currently one of the more structurally interesting stocks to watch. And before we even get into the analysis, I'd really appreciate it if you if you want Tilray to continue appearing regularly on this channel. Right now, it shows up every few days and sometimes even every other day, and your feedback in the comments genuinely helps decide whether we increase that frequency. With that said, the bigger picture here is not about hype or short-term excitement, but about whether the market has already laid the groundwork for a potential trend change. From a higher time frame perspective, there is a strong argument that Tilray may have completed a larger corrective phase and built a possible bottom inside what looks like a C wave. I don't want to get lost in the full Elliott wave roadmap today, because what really matters is how price has behaved since that potential bottom formed, and the behavior we've seen so far is far more constructive than what most people realize. After that low was put in, the market delivered a clean and decisive move to the upside that strongly resembles an impulsive advance rather than a random bounce. In Elliott wave terms, this move can be interpreted as a potential wave one, which is important because impulsive waves tell us that demand is stepping in with intent. That move was then followed by a corrective phase that unfolded as a more complex WXY structure, and what stands out is how precisely price reacted around the 0.68 Fibonacci retracement. That level acted as support almost perfectly, and from there, price rotated higher once again. Moves like this don't guarantee anything, but they do tell us that buyers are paying attention to structure and levels, which is something we want to see if a trend is attempting to shift. That's going to wrap up today's breakdown here on Tilray Times. Market volatility can be unsettling, but it's often during these uncertain periods that the clearest long-term opportunities begin to form. When you measure the size of that rally off the lows, it becomes clear why Tilray stands out. The stock moved roughly 125% higher in a relatively short amount of time, which is a significant gain, especially in a sector that has spent a long time under pressure. More importantly, price didn't immediately give all of that back. Instead, we've seen another advance begin to form, and once again, that move appears to be impulsive and structured. This is where the comparison with other cannabis stocks becomes important, because on this same time frame, some peers have not yet produced a clean five-wave advance. Tilray has, and that doesn't make it a guarantee, but it does put it ahead from a purely technical and structural perspective. The current pullback also looks controlled rather than panicked, which suggests this may be a corrective phase rather than the start of a new breakdown. From a trading and probability standpoint, this is exactly the type of behavior we look for when assessing potential opportunities. Strong, impulsive moves followed by measured pullbacks often create what's known as a 1-2 setup, where a wave 1 is followed by a wave 2 correction. That does not mean this setup has to hold, and it certainly does not mean anyone should blindly jump into a trade. Markets are driven by probabilities, not certainty, and every scenario has to be weighed against risk. That said, if the cannabis sector is going to see another meaningful push higher, Tilray currently looks better positioned than many of its peers, simply because the market has already done some of the technical work required for a larger move. Guys, 99% of people watching don't like or subscribe to the videos, so please take a second to hit that like button and subscribe. It really helps the channel grow. If we assume that the recent advance was indeed a wave 1, then the pullback we are seeing now would be a potential wave 2. Based on Fibonacci retracements and prior structure, the most logical area for that correction to unfold sits roughly between 11.45 and 8.24. Wave 2 corrections are often uncomfortable, deep, and time-consuming, and they frequently take the form of a three-wave structure, commonly labeled A, B, and C. Whether Tilray builds a clean and obvious ABC pattern or compresses that correction into something less clear is still unknown. And because of that uncertainty, traders who choose to participate often prefer to scale into positions rather than committing all at once. Risk management is absolutely critical here and cannot be ignored. A full invalidation of this entire setup would imply downside risk of roughly 35%, which is significant. Ideally, price should not break and hold below the 0.786 Fibonacci retracement, because sustained weakness below that level would dramatically reduce the odds of a successful trend reversal. A brief dip below that level could still be acceptable, but anything more than that would raise serious red flags. Even with relatively conservative stop placement below the 0.76 level, downside risk can still approach 25%, which makes position sizing and discipline far more important than being right about direction. Momentum indicators also provide useful context here. On the 4-hour chart, the RSI is sitting comfortably in the middle range, and the same is true on the daily time frame. That tells us the market is not stretched and still has room to move lower without breaking the broader structure. In fact, a bit more downside or sideways action would arguably make the setup healthier by allowing momentum to reset. Markets need to breathe, and strong rallies are almost always followed by periods of consolidation.